Hello, I'm Juliet Sarli. In this week's edition of IG Macro Intelligence, we take a look at the September rebalancing of the S&P ASX 200 index. The September review of the S&P ASX indices resulted in around 150 changes, including 9 on the S&P ASX 200 index. Included in the index, Dalrymple Bay, DroneShield, EBOS, GQG Partners, Greatland Resources, Hyperion X, Parenti, Superloop, and Tuas. They'll replace 9 other stocks that will be removed from the top 200, including Clarity Pharmaceuticals, Nufarm, Polynovo, and Emotive, with the changes to come into effect at the close of trading on Friday, September 19. The latest additions total an average float-adjusted market cap of $2.06 billion, according to Morgan Stanley research, nearly twice the historical average and around $500 million higher than the March and June announcements.
What that generally means is that a lot of the fund managers who previously weren't able to buy those smaller stocks are now actually able to buy those stocks. So it can actually have quite a positive tailwind to the companies that go into the index. It's certainly something that we keep a bit of an eye on over the coming weeks as that change happens. And quite often, those small stocks going into the ASX 200 can take a bit of a run.
Well, Greatland Resources stands out as the largest, with an estimated index weight of 11.8 basis points. It will also be included in the ASX 300 and Small Ordinaries indices, positioning it as the key stock for index trackers. Greatland Resources debuted on the ASX on the 24th of June with a market capitalisation of $4.9 billion. Its main listing is on London's Alternative Investment Market, or AIM. The gold-copper producer owns and operates the Telford gold-copper mine and adjacent Haverian gold-copper development project, both in the Paterson region of Western Australia. Now, shares have fallen around 14% since its listing on the ASX, but analysts are bullish about its long-term growth potential. And Refinitiv data shows the stock has 2 strong buys, 4 buys, and 1 hold recommendation, with an average target price of $8.04, suggesting it could rise a further 28% from where it's currently trading.
Looking to expand their mine as well. So you've got 2 bites of the cherry, and it's quite a large resource as well. So, when fund managers, want to enter the space, they'll always go from top to bottom. And it's somewhere around the 7th largest in Australia. So it will get some attention from the fund managers. And with the movement in gold, it could be seen as an undervalued asset. So I think it's a really great buy here.
Now, on the other hand, DroneShield shares have skyrocketed in the past 12 months, up more than 140%, giving it a market cap of $2.8 billion. Analysts are overwhelmingly positive on further upside for the stock, with the average broker recommendation a buy and a target price of $3.65, suggesting a further 15% upside. ASX TradeWatch data highlighting significant evidence, though, that DroneShield's long-term bullish trend could be nearing an end, specifically with the 5-day moving average tracking below the 20 and 50-day moving averages, suggesting investors are proceeding with caution. The salary packaging firm Smart Group is one of the 9 stocks that will be removed from the ASX 200 by the start of trade on September 22nd. Shares have risen around 10% year to date and a little changed over the past 12 months. The company has a market cap of around $1.18 billion. ASX technical data showing shares in a strong bullish pattern, confirmed by multiple indicators, specifically the 5-day moving average above the 20 and 50-day averages, and the 200-day moving average also trending higher. And James Gerrish from Market Matters says it's a stock he's been buying into while rotating out of large caps like CBA.
What's Smart Group? So recycling capital out of some of these expensive areas where the yields have been pressured into some of these other areas where valuation support is there, yields are higher, and also there's a path to a re-rate in terms of share price valuation and the like as things improve there.
And similarly, the market outlook for Smart Group is broadly positive. The average broker recommendation a buy and an average price target of $9.24, suggesting a further 6% upside. Morgans has a hold, Macquarie has an outperform, noting Smart Group's first half profit beat its expectations. And CFO Jason King told AusBiz that 2026 is a year of transformation for Smart Group, which is shifting to back office efficiency and customer experience enhancements, including the adoption of AI.
Well, we think that the outlook's pretty positive. We, like I said, we've been confident enough to put out some more details of the roadmap. We think the external environment is relatively stable, relatively supportive. We're really focused on achieving those strategic priorities and the transformation initiatives that we expect to work through over the course of 2026. And we think that the medium-term outlook for the business is positive in terms of margin and also revenue growth.
And that is your IG macro intelligence for this week. We'll see you next week.